Welcome to Investor in the Family Radio, a podcast about learning to invest. My name is Brian Bain, and I'm your host. This week, we're doing something unique with the podcast, and then I'm offering a series of interview previews for interviews that will take place in the DIY Investing Summit next week, which begins Monday, January 23rd. And the summit is being put on in partnership between Seeking Alpha and Investor in the Family, and each one of these interview previews stands alone in its value, but it gives you a glimpse of what the rest of the interview may be like, as well as the rest of the summit, which overall has 25 interviews from some of the top investors from Seeking Alpha. Registration for the summit is free for a limited time, so be sure and check it out at DIYinvestingsummit.com. That's DIYinvestingsummit.com, or you can check out any of the links in the show notes or the article. I hope you enjoy this preview of my interview with Chuck Carnevale. So you've already given a lot of different pieces of advice throughout this, which has been really helpful. But if you had a national platform and through your work at Seeking Alpha and Fast Crafts and on the summit you do, to give DIY investors your top three, and it can be more if you want, pieces of investing advice or wisdom, what would your top piece of advice be? Pieces?
Well, my primary piece, and it's been my philosophy, I guess, I think I've been doing this for 47 years, and that's focused on fundamentals first. Don't trust stock prices, especially, don't buy a stock just because it's going up, especially if it's significantly overvalued. Do your homework, concentrate your portfolios. It's one of the things that really gets a lot of investors in trouble is that, they own two stocks. I think 20 is a good number. 25 might be more comfortable, 30 names, but you get beyond that, you really can't spend the time and effort, especially for the do-it-yourself investor, conducting the research and knowing enough about all your stocks to be able to make intelligent decisions. So keep your portfolios diversified properly, but concentrated enough. I like to diversify enough to protect money, but concentrate enough to be able to really know the companies that I own, and I have a high deal of confidence in them. Don't get caught up in the hype and hysteria. Don't chase stock prices. One of the things I do with my Fast Crafts research tool, which I have a function in it where I can take the stock prices off. I look at the companies without stock prices contaminating my my thinking. So don't focus on price, focus on fundamentals. Beware of, valuations. Concentrate, and then do your homework. And that's maybe the most difficult thing, do you have the time, the inclination to, do your homework? And you don't have to be a rocket scientist, just make sure you own good companies at sound valuations. It's not easy, but it's not as hard as some people make it out to be either.
Right. Especially when you're taking a longer term approach, and if you're having 20 to 25 companies in your portfolio for a longer term, minimum 3-5 years, or hopefully even much longer than that, then it doesn't take as much work because it's not like you're constantly turning positions over and trying to find new ones, because once you get to a fairly full portfolio, it's more of a maintenance level work, which is much easier than the initial due diligence.
Yeah, and that would bring me another piece of advice. Warren Buffett once said, I believe it was Warren Buffett, inactivity strikes us as intelligent behavior. I'm trying to invest in a great company that I can be a shareholder of for a long time. And, so I try to be as inactive as possible and avoid, buying too often, selling too often. Every time you make an investment decision, if you've done your homework, it's difficult. And the more times you position yourself to make a decision, the more chances you have of being wrong as much as being right. So, build a good position and stick for the long run. I think that's always been good advice and always will be.
The information and opinions contained on this podcast are for educational purposes only. The information does not consider the economic status or risk profile of any specific person. The information and opinions expressed should not be construed as investment trading advice and does not constitute an offer or an invitation to make an offer to buy and sell securities.